Hey, everybody, we are going to talk about PayPal's latest earnings. We just got to look at the latest numbers. The stock went down pretty sharply as a result, so we're going to dig into all the numbers and see if it's a buying opportunity, if there's something you should be worried about, or just all the details you need to know. So before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now for free from the Motley Fool. It is the best way to support this work I am doing on YouTube. Again, fool.com/Frankel. So on the surface, all the numbers look really good. PayPal, they beat expectations on the top and bottom line. Revenue grew year over year. Earnings actually grew quite a bit year over year. Um, you know, a lot of the numbers look great. Um, their guidance looked strong. In the first quarter, they're guiding for at the midpoint $1.16 in earnings per share. Analysts were looking for $1.13. Just looking at some of these other numbers, and everything looks really good. So let me share my screen real quick. They put out an earnings presentation, so I want to go ahead and put that up here. All right. So if you're not familiar with PayPal's management situation, Alex Chris was named CEO a little over a year ago, and his focus for initially was on efficiency in making the business as efficient as possible, and then he's trying to return the company to growth with a few initiatives. I've done other videos on it. They've rolled out their fast lane checkout. They've rolled out a cashback debit card. They're rolling out an ad platform and a few other things. So in 2025, they returned to profitable growth. That's the headline number or the headline stat. They've made a lot of progress. A lot of what they've done is not in the numbers just yet, but some of it is starting to appear. So pretty encouraging so far. Um, they're expecting $6 to $7 billion of free cash flow in 2025. That would be an increase. They're expecting to buy back about $6 billion worth of stock. They announced a new $15 billion share repurchase. So all of that is really, really nice as a shareholder. I mentioned some of the things that they rolled out. PayPal Everywhere is that cashback debit card platform, enhanced checkout, fast lane, things to really make the online checkout experience easier. And it's attracted, as you can see on the right hand side, it's attracted quite a few partnerships, especially even with companies that are generally considered PayPal competitors, just because Fastlane is such a great product. Looking forward, they want to focus on, and all these are, intentionally vague. Innovation, product adoption, partnerships. They mentioned Venmo as a big growth lever that they could pull, specifically when it comes to the Venmo debit card and pay with Venmo. A few different retailers have now made it so you can pay with Venmo directly. DoorDash, Starbucks, Ticketmaster are some examples of ways you can just directly pay with Venmo. So they want to focus on that going forward. Yeah, there you go. You can see the Venmo right there. So looking at the fourth quarter and full year, so here, one of the reasons the stock is down, in my mind, there's two big reasons. The first one is that this payment volume number right here, 7% year over year growth, but it came in short of what analysts were looking for. So that's number one. But if you look down the margin looks good. The take rate actually increased, or I'm sorry, the take rate fell. So that's the other issue. Margins are under pressure a little bit, but efficiency is working. Companies generating a lot of free cash flow. You can see for the full year of 2024, about $6.77 billion of free cash flow. That's 60% more than a year ago. And again, they're expecting something similar for this year, something in the $6 to $7 billion range. So keep an eye on that. Active accounts up 2% year over year, so nothing really to get too excited about. But growth is much better than the decline we were seeing, a few years ago. Another kind of concerning point: the number of payment transactions is down 3% year over year. Transactions per active account, it grew by 3% year over year, but that's a lower growth rate than we've seen in previous years. So all in all, solid numbers, not fantastic numbers. Um, you can see the payment volume mix. They go through that in their presentation. I'm not going to go through all that individually. Um, and I mentioned some of the key financial results through revenue, transaction margin. That's really what people seem to be concerned about is transaction margins and take rates and things like that going forward. And to be fair, that's something that is worth watching. Um, but all in all, I think PayPal did a really good job this quarter. I think new management's doing great. Their guidance, just looking forward before we get out of this presentation. I already mentioned some of this, the free cash flow, the share repurchase guidance, things like that. Um, they've done a really good job of growing earnings and making things more profitable. They're expecting $4.95 to $5.10 a share in adjusted earnings. That would be 6 to 10% year over year growth, which is solid. I mean, the stock's essentially priced for no growth right now. Um, so I personally think that PayPal is one of the better value stocks in the market right now. Let me stop sharing real quick. There's a lot to like about this. They're going to have an investor day, by the way, on February 25th, so in just a few weeks, where you'll hear a lot more about their plans going forward. But at the current price, there's a lot that's not reflected yet. The ad platform is one big thing that is just getting ramped up. That was just launched officially in October. So it wasn't even in place the entire fourth quarter when we saw these numbers. It's just really getting ramped up. And for now, the stock trades for about under 16 times forward earnings, for about 12 and a half times free cash flow. Those are very low metrics, especially for a company that is growing and is forecast to continue growing. So I'm a big buyer of PayPal at these levels. I actually added to it the day after earnings, and hopefully you found this informative and entertaining. And do me a favor and hit subscribe to my channel and leave me any questions you might have. I'll do my best to get to each of them individually. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.